talking about emerging markets. We've got a panel of experts from Red Star Asset Management, the director, Scott Licamele, and from Metzler Payden, analyst Vlad Milev. Also like to welcome, well, we've got Uri Landesman. He is the president of Platinum Partners Value Arbitrage. I should congratulate you on your new position.
Thank you very much. Thank you very much.
But now that you're at Platinum Value Arbitrage, you're pretty bearish on emerging markets now. What happened?
Well, you know, we've been reasonably cautious about it really all year. Thought that the U.S. would be better than emerging markets equities for the most part since the beginning of the year. Now, really think so. Think that there are going to be significant money flows out of emerging markets the rest of the year into U.S. stocks, into European industrials and technology stocks, and maybe even into Japan.
See, he likes European industrial stocks? Haven't you read a newspaper or seen a television program about Greece?
You know, well, I obviously watch your TV program every day. And, you know, our belief is that the economy is actually pretty strong and that global industrial companies are going to be fine. Remember, the weak euro really benefits the European industrial exporters. So the big companies, particularly the ones in the stronger European economies like France and Germany, are still experiencing decent domestic demand and are finding the wind at their backs in terms of their exports.
All right, Vlad, come in on this. It looks like you got a little bit of an ally here, someone that's actually long stocks.
Finally, you know, I was feeling a little lonely in this group right now. Yeah, you know, we have somewhat of a bias to an extent replicating this, but we found that the more interesting type of place for us have been in the mid and small cap area. So places that didn't necessarily rally so much last year. They had this huge blue chip rallies. You know, Russia was up about 130%.
Is that all energy driven?
A lot of it was energy driven. And generally, when you talk about the Russian market, a lot of it's going to be commodity plays, whether it's on the energy side or the material side. So this was a big rally, but at the same time, there was a lot of companies in the mid and small cap area, and that's Poland, that's Russia, and a couple of other places.
How about Romania? I know that you like that too.
Romania, but that's all small cap at the end of the day. That didn't really rally as much, and the risk premiums we thought were too high. Those were solid businesses that got a huge discount because everybody was worried, obviously, about the global environment where we were going. But now that it turned out that we've turned the corner, they were kind of left behind. So we found those places a good place to hide. And ironically, they once again don't trade as much in sync with, let's say, the Western European large caps.
All right, Uri, let me just come back to you for a moment because you're talking about industrial companies in Europe. What about commodities? Is that an area that you still want to be invested in? Because you've talked about them in the past.
Right, I have, and I've been bullish on commodities for a long time. I am still somewhat of a subscriber to the super cycle in global commodities. That said, for right now, we're actually pretty cautious on commodities. Would much rather be in the industrial cyclicals like the cap goods companies, in consumer discretionary companies, which are tied into economic recovery, and believe that the flows are coming out of hard commodities, and that in fact you could actually have a pickup in demand for industrial commodities like copper and yet see the actual commodity prices fall.
How is that?
Well, we think that that financial speculation plays a large part not only in precious metals like gold and silver, but also in metals like copper and nickel, and that in fact the commodities traded well ahead of the demand. And even though you're going to see a gradual pickup in demand, actually the commodity prices are discounting an even higher amount of demand than we're going to see. And in fact, the commodity prices and hence the equities that are tied most directly into them actually go down versus the rest of the market.
Scott Licamele, let's leave gold aside, but I mean, do you buy this argument that commodities, the bloom is off the rose?
Well, I think one of the concerns I have on the industrial metals side is excessive Chinese stockpiling during the 2008 to 2009 period, or the end of 08 into 09. I think that's a concern that I have. In other words, and if you look at the potential for deceleration of growth within China as they address the inflationary issues in the economy, and particularly in India and some other of the larger emerging markets, I think that could be a negative for commodities prices. But I mean, again, my main focus at this point is really more on what's going on in the advanced economies as well as Asia, ex-Japan. because I think that I believe there will be decelerating growth in the second half in the U.S., and I think that there's an excessively optimistic view on U.S. growth going into second half.
So are we in a situation in your mind where it's about the preservation of capital rather than the appreciation of capital?
I believe so. I think to a certain extent you need to be very concerned about the issues in the European Union. Yes, of course, a depreciation of the euro would bode well for exporting industrial companies in the European Union. But if you have excessive depreciation or a volatile period of depreciation, it's going to raise interest rates. It's going to create risk aversion, and it would have a contagion effect, I think, if you see a potential rupture in the European Union itself, which is what, in my view, I think will occur.
Uri, talk about Brazil for a moment, because we talked in the past about how Brazil basically has two economies. One, which is Petrobras and a lot of resource-based companies, but that there's also a burgeoning middle class, and you've bet on that. Are you still betting on it now?
Yeah, not as much, and the problem is that I think that the correlation between the Brazilian market and the Chinese market is very, very high, because so much of the commodities in Brazil go into China, that if Scott is right that there's been too much stockpiling there, if the activity by the Chinese government to slow the economy down right now really chills the demand for the commodities that come out of Brazil, even those domestic plays which are more tied into the emerging middle class in Brazil, which is a story I believe longer term, I believe that will not be what drives the market. The sinking tide will unfortunately carry all Brazilian boats down, and for now I'm actually out of Brazil. I even have sold my longtime favorite, Cosan.
Cosan, you sold Cosan, the ethanol, the sugar cane producer?
I did, right around sort of current levels. I think it's a good company, but I think the commodity story is over in Brazil for a while.
All right, we're going to have to leave it there. I want to thank you very much, Uri Landesman, coming to us from Platinum Partners Value Arbitrage. We've got Vlad Milev from Metzler Payden and Scott Licamele from Red Star Asset Management.